We have a special voice joining us right now. This is an exclusive Keki Mistry of HDFC commenting on what's happening in the banking sector. Mr. Mistry, it's great to have you on the show. Thanks very much for taking out the time. Now, do you think that the conflict of interest has become a major issue, that there is likely to be a problem in the banking sector? In fact, before coming to that question, I just want to quickly ask you about how you're going to be approaching this entire issue, these allegations and scams. What would that do for the banking business?
I don't see credit offtake having anything to do with so-called scams that you are talking about. The Nirav Modi, for example, is one, but that is one-off case. Hopefully, these kind of things are not that frequent in the banking system, and certainly credit offtake is beginning to pick up. And my sense is the demand will pick as the investment cycle in India picks up. Demand for money will also keep growing.
Right. Mr. Mistry, before the new controversy, there was a clamour for privatization of banks as well. Now we're hearing murmurs of nationalizing private banks. As an industry veteran, what is the right way forward?
I don't think there is anything like a right way or a wrong way. I think what we are doing is fine. A stray case here and there does not constitute any major deviation. So I frankly have no comments on that. I think what we are doing is fine. I think let the private banks remain private and let the public banks remain public.
Frankly, expected this kind of a response from you, Mr. Mistry. But let's talk about the rate revision. What is the rate revision at HDFC, and what do you make of the increase in rates?
Well, interest rates have gone up. Cost of funding has gone up. If you were to compare what rate at which we were borrowing money a year ago and the rate which we are borrowing money today, costs have gone up. From the lowest rate that we saw, let's say in July 2017, compared to that, even today, even after the credit policy, even after the reduction in the government's borrowing program, interest rates on a 10-year bond, for example, are up by more than 100 basis points on an annualized basis. So this increase in rates, which ranges from 5 to 20 basis points, is basically done in order to offset the higher cost of funds and in order to ensure that our spreads remain stable. So we've historically targeted spreads which are in the range of 2.2 to 2.35. And my sense is that with this increase in rates, spreads will continue to be in the range of 2.2 to 2.35. The other thing is that we increased the rates now in April, but most banks, as you would have seen, had increased their rates in February and March itself. So the MCLR for most banks was increased, some in February and most of them in March.
Right. Mr. Mistry, there is a lot of buzz, and let's talk a bit about HDFC on the acquisition of Apollo Munich. Can you help us understand the plan of HDFC for health insurance because it's a growing sector?
See, we've all said that we were interested in the health insurance business. We said we could look at either organic or inorganic growth. We have no particular company or anything that of acquiring at this point, but we are happy to look at organic and we are happy to look at inorganic growth. But if inorganic growth opportunities do not come up, then we are happy to look at organic growth. But we believe that the health insurance sector in India offers huge opportunity for growth.
Okay, Mr. Mistry, great that you could take time out so early in the morning and speak with us. Thank you so much for taking the time out.